Shawn, thank you so much for joining me here today. Can you tell me about the opportunities in private credit, specifically in Europe?
Sure. Thank you for having me, Lily. I appreciate it. So maybe I'll start with private credit. Normally, when you hear private credit, many people will think of leverage loans, direct lending, fantastic business. The definition has expanded rapidly to include what I would refer to as overall private credit. So on one side, you still have direct lending. It's maybe 2 trillion or so opportunity set. On private credit more broadly, it goes up to 40 trillion, and that includes majority of which investment grade, corporate, and infrastructure, as well as ABF. So really touching the things that we do every day for companies that have standard refis, large CapEx projects, to ABF, to royalties, and there are numerous examples. Specifically, if we focus on Europe, Europe has always been a very deep market and a strong provider of private placements for decades. You saw that in general corporate refinancing, some CapEx projects. It then extended into infrastructure when infrastructure was pulled more broadly into overall private credit. And we continue to see that. And if you look on, any basis year by year, Europe will represent a very, very strong percentage of the overall private placement issuance. And we're seeing in Europe and globally, privates moving from what we've seen in the past to taking on and helping to fund large CapEx, whether that's in energy, digital assets, and so forth. So it's a super exciting time. And there's a lot of interest on both the issuer side and the investor side.
But then why do you think private placements hold such an important role in the growth of private credit there?
Well, I guess there's 2 reasons. And we can look at it from both sides. If you look at it from the issuer side, there's a demand from them to have longer term capital, flexibility, to be able to fund, projects in-house, off balance sheet, as well as, give them the options to customize solutions for their business. It also ties very well into, as I mentioned earlier, into infrastructure. So from that perspective, it offers an alternative for issuers versus the public market and bank markets, or also to go side by side. On the investor side, given the growth and demand from insurance and pensions for long-dated, high-quality assets that can match their liabilities, so they can then provide coverage on insurance, but also guaranteed income on the annuity side. And they can do it in a way where it has, incremental premium per unit of risk, low loss, so very strong credit quality, whether you're going to be senior unsecured with covenants or whether you're secured, and a very long-term track record of performance.
Amazing. So I think what you're saying is really, really exciting, but do you really think that it's going to hold in the next, 5 years, that private credit is just going to keep going?
I do. I think there's strong tailwinds for private credit on all sides. One is the reality that private credit overall fuels the real economy, and it's no time like the present where we see, this new industrial renaissance into large CapEx projects that, haven't been thought of before, sort of help with digital assets, to help with infrastructure, to help large companies grow in a time where there's tremendous movement. That's on one side. On the other, you have, the need to match the growth of insurance that needs to get good, high quality assets. And it really works together as like a really ideal symbiotic relationship. And frankly, I think we're fortunate, whether on the investing side or bank side in this market, to sit in between that. So I see very, very strong opportunities in the next few years. And I see the evolution of private credit into different types of offerings for investors. I see more liquidity coming into the market, and, very, very bullish.
Can you tell me about then the opportunities that you see coming and maybe some of the challenges as well?
Sure. So I always, whenever, you think of opportunities or challenges, sort of sometimes one comes from the other. The opportunities, again, massive need for investment grade capital on a global basis. I think we see that. Then you see, the sort of less publicized, but the necessary, day-to-day corporate refinancing, day-to-day, supplying growth for companies, supporting infrastructure across the board. Challenges, challenges are always tricky because sometimes, people identify them in hindsight. When major challenges come, they might be a surprise. So I would say, looking at it in a private credit lens, the challenge that we face is to make sure that we continue to hold high discipline around credit underwrite. We do massive, exciting deals. At the end of the day, we're at par. We have downside. So we want to make sure that we continue to have well-structured transactions and that we're supporting things in the right way. And I think if we combine those two, we'll continue to have really strong growth.
And that feeds into the success of private credit in the longer term as well.
Yes, absolutely.
Thank you so much for joining me here today.
Thank you, Lily. I appreciate you having me.